We're all looking for an investment strategy that works consistently. Perhaps a valuation technique, a technical strategy, or a way to predict which funds will outperform. While investors go to great lengths to create such cleverly named strategies as Japanese cloud formations and economic surprise indicators, no methodology seems to work all the time. However, there's one strategy that absolutely never fails to boost after-tax returns, yet it is often overlooked: long-term investing. So you can get the long-term capital gains tax treatment. Before I go any further, do note I'm not a financial advisor. Before implementing any strategy, I suggest you consult one. We're simply here to deliver some facts that we think will be relevant to your investment. That being said, do also note that long-term investment will not work on every asset. Use it on the wrong ideas and you can still lose money. But according to NASDAQ, across the market as a whole, it hasn't failed even once in the past 60 years. The truth is, you don't have to trade every day or every week or even every year to beat the market. In fact, your success actually increases the fewer trades you make and the longer you hold a stock or other form of asset. The best proof study comes from Oppenheimer. They looked at the S&P 500 going all the way back to 1950. Over that time, the S&P 500 has never suffered a loss in a 20-year period. Of course, we all know you can't say the same for holding stocks for a year or two. When you hold stocks for a short period of time, your odds of losing money are much, much higher. And you can lose a boatload of money in a hurry. In fact, in its worst one-year period, the S&P 500 dropped 44.8%. No wonder Warren Buffett has always said his favorite holding period is forever. But it's surprising how many investors still fight this. The average holding period for an investment was 7 years in 1940, according to William Hutchings of the Financial News. By 2007, this period had shrunk to just 7 months. So while all the evidence points to longer holding periods being better for your portfolio, most investors are doing the exact opposite. This applies to gold and other precious metals as well. Did you realize that if you invested $1 million in gold 40 years ago, you'd be sitting on $50.6 million today? That's how much gold has appreciated. The long-term strategy will become even more important in the years ahead as taxes may rise due to the fiscal cliff negotiations, and that could cut into a retiree's lifestyle. So what are you waiting for? Call us, talk to us about how you can get into gold. It's hovering, in the high 1700s right now, and there's been predictions that it could hit upwards of 50,000 sooner than later.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.